You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 25th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room. So that broadcast is private. It's reserved for members only and those who are taking their 1-week free trial. When Michael comes on in just a bit, and as you can see here, there's a slight change in schedule today. This is our normal schedule. But today, Michael will come on about 12:20, do a recap of what happened in the live room this morning. He'll trade live from 12:30 to 1 on the TradingView platform. Then I'll come back and do the recap of the Logic 247 alerts, the concierge trade alerts, and discuss the markets from a larger time frame perspective. Now, when you take the trial, and again, Michael is going to show you step by step how to take the trial, you're not just getting a trial of the live training room, because that's only 2 hours a day every trading day. But CFRN operates 24/7. We officially open for business every Sunday night at 6 p.m. Eastern, right on up until the markets close Friday afternoon at 5 p.m. Eastern. But all of our members know that they can get around-the-clock support via Telegram. And while you're on the trial, we're going to treat you as if you were a passport holder. We want you to get the full experience of what it means to be a member. So that, and there's no credit card required. I want you to have a clear head. But what we want is for you to be able to make a well-informed and intelligent decision at the end of your trial as to whether or not trading is right for you. Now, the live training room ends each day at 11:30 a.m. Eastern. We take a 30-minute break and come back for the afternoon broadcast, this broadcast, which is open to the public. It's everybody everywhere on planet Earth with an internet-connected device. There's a couple different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link. Fill out the 30-second registration form, and you're done. What will happen is, going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and be a part of the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there will be days when you're busy, you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, I'm sure. So really, you only have to remember the CFRN part. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we're actually simulcasting. We're broadcasting live on YouTube and on our platform. But we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. For those of you that are new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year, do the same thing. Obviously, the more recent broadcasts are going to be more relevant to what's happening today in the markets and in the world at large. youtube.com/CFRN. So let's jump into our daily devotional. Our topic this week is the complete Bible answer book in 5 days. We're on day 4. Today's scripture is Matthew 6:19 through 24. And I'm going to share it with you from the Message translation. Starting in verse 19. Don't hoard treasure down where it gets eaten by moths and corroded by rust, or worse, stolen by burglars. Stockpile treasure in heaven, where it's safe from moth and rust and burglars. It's obvious, isn't it? The place where your treasure is the place you will most want to be and end up being. Your eyes are windows into your body. If you open your eyes wide in wonder and belief, your body fills up with light. If you live squinty-eyed in greed and distrust, your body is a musty cellar. If you pull the blinds on your windows, what a dark life you will have. You can't worship 2 gods at once. Loving one God, you'll end up hating the other. Adoration of one feeds contempt for the other. You can't worship God and money. Now, one of the most misquoted scriptures in the entire Bible is that money is the root of all evil. I said that's the most misquoted scripture. The actual scripture says the love of money is the root of all evil. Quite a big difference, don't you think? So what is the biblical view of wealth? I'm persuaded that the Bible teaches a form of Christian capitalism, responsibility associated with wealth. God's word does not promote the possession of money for the sake of just possessing money, but instead encourages us to use money for the sake of the kingdom. In short, a biblical view of wealth involves an eternal perspective. First, it's crucial to realize that the earth is the Lord's and everything in it, the world and all who live in it. That's Psalm 24:1. God's the landlord. We're just the tenants. We did not arrive with anything, and we will not take anything with us when we leave. Have you ever seen a U-Haul following a hearse? Probably not. Just remembering this fact of life will save you from a world of hurt. Furthermore, poverty does not equal piety, nor do riches equal righteousness. God prospers some, and he puts others in more humble circumstances. If there were a 1-to-1 ratio between godliness and wealth, the godliest people in the world would be the wealthiest. A quick check of the Forbes 500 will quickly dash such an illusion. Finally, it is important to view wealth with eternity in mind. In other words, lead your life here below as a responsible steward, whether you have a little or a lot, so that one day at the judgment, God himself will richly reward you. It is your bank statement in heaven that counts. If you fix your hope on the one you have down here, you are bankrupt no matter how many digits you count next to your name. Join me in a word of prayer. Heavenly Father, we come before you with hearts full of gratitude for your word as we reflect on this passage in Matthew 6. Lord, help us to store up treasures in heaven, where neither moth nor rust destroys, and where thieves do not break in and steal. Guide us to keep our eyes fixed on you, knowing that where our treasure is, there our hearts will be also. And Lord, teach us to serve you wholeheartedly, not being divided by the things of this world and your kingdom. May we have a single-minded devotion to you, recognizing that we cannot serve both God and money. Lord, help us to understand there's nothing wrong with money. Ministry costs money. But help us to truly understand that it's the love of money that is indeed the root of all evil. Illuminate our hearts with your truth and help us to walk in your light each and every day. It's in Jesus' name we believe and pray. Everybody said, amen. Amen and happy Thursday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. The Dow's up 437 points, just over 1%. The NASDAQ is up 90 points. S&P 500 is up 38. And the Russell 2000, our man in the street, up 43 points, 2% on the session. In the commodity basket, crude oil up 61 cents, trading 78.20 last. Gold down $55, trading 23.60.40 last. That's a drop of over 2.25%. Silver down $1.28, trading 28.02 last. That's a drop of over 4%, or well over $5,000 per contract traded. In the Asian markets at the close, the Nikkei fell 1,285 points. It's 3.25%. The Shanghai dropped 15. The Hang Seng fell 289, which for the Hang Seng is basically 1.75%. In the European markets at the close, FTSE posted a gain of 32 points. The DAX dropped 88. The CAC fell 86. And for the CAC, that's a drop of well over 1%. That gave us a red day in Asia. It was a mixed day for the UK, thanks to those 32 points from the FTSE. And here in the US, it is a green radio Thursday. Now, Michael should be here in about 5 minutes. I just got in a fresh recap. So let me grab that, as I do each day here lately, it seems. And that's okay, because we always want to have the most updated info possible. And then let me format it, this screen. Those of you who are members, of course, have already seen it in the discussion group. Even trial members have seen it. But for the general population, you haven't. So I'm going to show it to you. I was able to do two things at once, talk and configure the recap. We are in week 312. Over the last, I'm talking about Logic 247. That's our 24/7 around-the-clock E-mini alert service. But it's not just E-minis. It's also crude and gold and silver and euro and bonds. Over the last 312 weeks, we've issued over 17,200 individual handcrafted alerts. And we've averaged, on a weekly basis, 20% or less of the alerts being stopped out based on market structure, in a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 88 alerts. 11 have been designated no trigger. But as I wrote in the discussion group this morning, those no triggers, you should keep those on a notepad, because eventually price will, in most cases, find its way to that opportunity. But for the sake of the recap, to keep it timely and updated, we go ahead and just mark them. At some point, Valerie has a formula that she uses. But even though it's marked never triggered, the opportunity itself still exists. That's the point I'm trying to get across. And at the time she just did the recap, we're still waiting on the outcome of 18. So we've got 59 actionable alerts, of which 8 or 14% would have been stopped out, again based on market structure. And that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, Michael has arrived. So, as I explained, he's going to give us a recap of the live training room a little early today. And he's still going to do 30 minutes of live trading on the TradingView platform. And then I'll come back. We'll go over the concierge trade alerts. We'll look at each and every market. We'll take that big picture look like we do every day. And then I'll wrap it up with our good word for the day. Looks good.
All right, here we go. Let me get this up here. Good afternoon, everyone. Happy Thursday. Today is the 25th day of July, 2024. What day is the second? The second is next Friday. Okay. If you have not taken a free trial lesson, you want to go to mytradingiq.com. Click on this purple button right here. When you click on that, it's going to bring you to this registration page. where all that we ask for is your name, your email, and your phone number. There are 5 multiple choice questions, and then down here you can give us machine ID if you have one, NinjaTrader, and your TradingView login ID if you have one of those. If you have both, give us both. We can get set up with both. That is to get your charts indicating, your indicators indicating at the beginning of your trial. Now, in the spreadsheet today, we had a pretty good morning again. And if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 25th day of July 2024. We made 10 ticks on the NQ, 57 ticks on the Russell, 23 ticks on the YM, and 20 ticks on the ES. That put us at plus 700 on the morning session. Today, it took 4 minutes and 1 trade to get to $1,900. That is with 19 contracts on. All right, so it was $100 per contract. We took a total of 17 trades today. So on the month now, we're at $807 over 17 business days, averaging $518 per contract per 2-hour business day. So we are on track right now to quite possibly have our best day of the month. We're averaging $518 per day. And what do we have left? 1, 2, 3, 4 business days, so $2,000 more. That would put us at $10,800. The best month we've had so far this year was April at $10,745. So we are on track. If we can maintain that average of $500 a day, to have our best month of the year in the middle of the summer. That is awesome. Anyway, this should say July. Michael Road did not catch that for me. He usually catches all those little things for me. May, June, July. All right. So for the month of July now, we're up $807 over 17 business days, averaging $518 per contract per 2-hour business day. We've now gone 137 business days this year that we hit our goal. So every single business day this year we hit our goal. 52 business days since our last day that was not green, and 299 business days since our last red day. So we're almost at 300 business days. That's well over a year. Since our last red day. I'm knocking on wood. Hopefully it's not going to happen. I want to finish the 2420 blueprint with no red days. That would be pretty awesome. I think there's 1 red day in there, maybe 2. But the minimal number of red days in the 2420 blueprint. And we're going to finish that at the end of next month. Those of you guys that have been following. Anyway, if you were doing 2420 blueprint, you'd be in the 7th contract so far this year and be averaging $1,598 an hour. If you started in January of last year with me, you'd be at 19 contracts and you'd be averaging $6,718 per hour. These days where I get it really early, quick, 1 trade, those days really help that average hourly earning thing. This month has really been big. We've gone up about $700 per hour in this month alone so far. I think, right? At the end of we were at 6,000 last month, at the end of the month last month. And the other month before that, we were at 6,100, so we actually went down last month. 5,300, 4,700. Interesting statistics in there. Anyway, we are now at 6,700. So we'll see where we end at the end of next week. Hopefully it'll be much better. So let's get into the actual trades. Now we did trade something on everything today. The YM, we had some really nice trades on the YM. Well, we had 1 really nice trade on the YM. We had some trades that were not so nice too. We did have a good lesson plan today. The lesson plan was on about the DOMs. We had a recording of that lesson plan. If you are an active partner and you want to get a recording of that, send me a message in Telegram. Okay, and I can send you the recording from this morning. Okay. All right, here we go. So our first trade in here on the YM was a stop out. We're minus 10. And then the next trade was right in here. That's the one that I kind of screwed up. I went long, I went to go put my stop at break even, and then I ended up getting short, and I went to put my stop at break even, I ended up getting long again, and then I ended up losing a few ticks on that. So I lost 3 ticks on that one. So that's why it's got a different color arrow. It was an accidental loss, but I went from minus 10 to minus 13. And then on this one here, I picked up 10 to put me at minus 3, it looks like. And then the next trade over here, I picked up 8 It looks like to get me to +5. And then we had our big trade. The next one was our big trade, I think. Come on, where was it? Right here. This one we picked up 18 ticks, it was like. 19 ticks, I think is what it was. 18 or 19. Oh, anyway, went to +23 is what I wrote down. It did go way more than that, but that was at the end of the session. During the break, there was a nice blue arrow here coming right off the ribbon and the weekly trading zone. A nice blue arrow here. Now look at all those blue arrows and the black arrows that coincide with pulls out of the oversold. Nice chance right there. Nice trade in there. Nice trade in there. Nice trade in there. And some really good black arrows in here as well. In the future, we're going to be able to take more of those black arrows. We're going to have a little more information to be able to take more of these black arrows with confidence. Okay, you guys will see all that coming together in the future. It's actually going to be called something different. It's going to be called something different, but we'll call it a range scalper for now. All right, and that's coming for passport people in the future. Anyway, that was the YM, and on the Russell now, let me slide this all the way over here. Do this and over. I want to finish the 2420 blueprint with everything that we have now, using all the same tools all the way through. Okay. And the way things are going, I'm gonna hit all the milestones that I want to when we get to the end of the 2420 blueprint, hopefully. All right, on the Russell now. We did have some pretty good trades on the Russell too. We started out here. Our first trade on the Russell was, took a few minutes here. It was our first trade on the Russell was right here, and we picked up 25 ticks on that. Our next trade on the Russell was right here, and we picked up 30 ticks on that. And then the next trade on the Russell was not for a while, I don't think. Break even right there. And this one right here, we had a little bit of a gain on that, just a couple of ticks. And that is all that we did on the Russell. I think we might have had another break even trade in here, but I didn't write anything down as far as gains go. So moving through, we did have some nice blue arrows in here, nice blue arrows, black arrows, and green arrows, and all kinds of arrows through here. But let's see, I guess we didn't have any more trades there on Russell. Okay, getting into the break here, we had this one blue arrow right here. The outer band's completely on that blue/purple arrow. You might want to just skip that one. We had another blue arrow that went enough to get the stop to break even. If you stayed in it, you could have had the purple arrow right out too. Blue arrow here, and they really didn't give you anything to work with. And that was it on the Russell. Okay. And now the ES. Let's take a look at this ES. We are in the 7-tick range again. And I did have one stop out today that was an 8-tick stop out that I thought was a 10-tick stop out that I corrected after the fact. This is where we got the goal for the day, I think, right here. Our very first trade on the ES, we picked it up right here, and we actually got it in the pre-market. We got 8 ticks in profit on that trade. I entered it a little bit on the pullback right here and went just enough to get the goal for the day. That was our first trade of the day, and that's where we got the goal. The next trade was right here, and we picked up, looks like 4 ticks to get to 12 on that one. We missed a couple of nice purple arrows there. We had a stop out. Why am I not showing this stop out properly? I had a stop out on the ES. So I went from, right there, 12 down to 2. That's what it was. I went from 12 down to 2. I did show it. Right, that was the one where I thought I had an 8-tick stop out. And I thought I had a 10-tick stop out, but it was actually an 8-tick stop out. So I went from 12 down to 4. And then I went from 4 to 16 on the next trade, where the next trade was this one right here. We picked up 12 ticks to get us up to 16. And then the next trade was right here. We picked up 4 more ticks to get us to 20. Now, all of these things right here, all these lines that I drew in here, those are all from from the lesson plan today, right? We were using the ES and we were able to just walk through the lesson plan and walk through some really nice trades as they were triggering in real time, live in real time, reading the DOM. I think it was a good lesson plan today, reading the DOM. So if any of you guys want that, you just got to send me a message in Telegram. Okay, you have to be an active partner, and I'll send it to you. Okay, so moving on here, we got into the break, and it looks like there were some purple arrows in there that worked out okay. This blue arrow was at the end of the session this morning. That would have been a break even for me. This blue arrow here would have probably been a break even, maybe a little bit of a gain for me. But that was all that we had today, right? And that was the ES. Now, I want to, I got to do, hang on, let me do the NQ really quick. We only did a little bit on the NQ today, and it was way back at the beginning. All right, I stopped looking at the NQ because it was jumping around so much, so fast that even the 15 range, it was going too fast, and I really didn't want to deal with it. And we were doing enough with everything else, so I didn't really need the NQ. We had 2 trades on the NQ, one plus 30 and one stop out. So I'm going back to the beginning to show you that because it happened at the beginning and then we stopped looking at it. Wow, that's a lot of bars in there. A lot of bars. There's our stop out. And it's funny how it starts bringing it over in chunks. All right, here was our first trade on the NQ. We picked up 30 ticks on that. And you see there were a bunch of blue arrows in here, but it was just jumping around so fast, it was hard to get. Most of those blue arrows so far are all winning trades. So far, everyone would have gotten you at least to break even. And there were several of them in there. That would have stopped you out. There was our stop out right here. And I shouldn't have even stopped out on that. It went enough to get the stop to break even, but it bounced around so fast that I wasn't able to do it, and it stopped me out. And that's when I stopped trading the NQ. We had some nice blue arrows in here. Nice green arrows, blue arrows, more blue arrows. You guys understand the blue arrows are the trades that I like the most. Blue arrows are the trades that I think have the best probability of getting you your goal for the day in a single trade. And you know, as far as the diamond principle goes, the blue arrows are the ones that are the most consistent of getting back to the origin within the diamond principle. Okay, so I'll explain that to you in just a minute here. It's now 12:33 and I actually have stuff going on, so I will explain the diamond principle in just a second. Before I do that, now I'm saying this for all the people who are on YouTube as we start the YouTube. I know they're used to be coming on at 1, so they're probably not here, the ones that come to watch me anyway on YouTube. But I will say this: if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. When you click that, there is no credit card required for the trial. Click that, and it's going to bring you to this registration page. Just fill out this form: first name, last name, email, phone number. 5 multiple choice questions. If you have Ninja, give us a machine ID. If you have TradingView, give us a login ID. That's all you need to do. Give us a machine ID and a login ID. And speaking of Ninja, I have to get my machine ID from this computer and give it to myself to authorize myself on another computer because for some reason this computer will not let me. And this is where that Telegram comes in so handy. All right, so let's get into the actual trades. All right, that is how you take the trial. Let's get into some actual trades now, if we can. I was going to show diamond principle again, and I will in just a moment. I want to check in Telegram in here and see if everything's all good. It all looks good there. Let's get all these things out of the way so I can get to my DOMs, and I can now reach my DOMs. All right, here we go. We're in a no trade zone right here, so we're not going to have a trade set up on the NQ. We're coming out of a no trade zone here on the ES, but we're still in it. Actually, every market is in a no trade zone. So let's go look at something else right now, really quick. Let's go here and look at Bitcoin. Right now, Bitcoin, this is on the daily chart on Bitcoin. So it's made a move up and it's pulling back a little bit after the move up. It should relatively soon, I think, make a move up to this level right here, 74,000, right in that area. I think that should be happening pretty soon. I did not put in here. Let me see if I can put in here. Let's put that down there at the bottom. And let's see. Yes, this is getting ready to trigger in here. It's getting ready to trigger on the upside. Okay. Going to minimize that, but you will, I think soon we'll be seeing something moving up here, and we should get up above this level right here, up above 68,400. Now, I don't know what the catalyst is going to be to make that happen, but that should be happening relatively soon. Now, I want to go out here. There's something that I used to look at almost every day that I haven't looked at in a little while. And this, Dwayne, is that one we looked at last week. Remember what was the name of it? Metaplanet. It took a hit here, a big gap down right here. Yesterday, gap down. I guess there were some earnings in there that it gapped down on. It's not showing any earnings down here, but this is on Toronto Stock Exchange, so it may not. This is doing just like MicroStrategy or Mr. did, buying Bitcoin with the money that they have, and that's what had their value running up right here like this. So imagine that some earnings come out that made it go down. MicroStrategy had the same thing happen. They had earnings come out that made it go down. I don't know on Toronto Stock Exchange if $220 is a high price stock, but MicroStrategy did a 10-for-1 split to get theirs out of the stratosphere down to something that everyone can pay for. Anyway, the thing that I was looking at was this. Look at the ES and look at it on this time frame, and if we, not this time frame, the 27 range is what I was looking at. I was looking at it this morning at 4 a.m. right here, this trade right here. I think that was when I took, yeah, this one right here was one that I took this morning. And the reason I took it is because right here we popped out of the overbought. And that thing took forever. It felt like. It was forever. It was like almost 45 minutes for it to move down to my target. So I had a 27 range on this, right? So I had a 30. What did I have? A 30 by 60, I think is what I had for the bracket. 30 by 60 is what I was looking for. Okay. And I'm only showing you this because this is stuff that's going to be coming soon. And it's going to be coming in different ways. You know, for the TV trades, it's going to be coming. It's going to be within here. You're going to have an indicator. You're going to have something in here, like a checkbox in here. That you're going to be able to click and turn it on. It'll be like that. You'll be able to turn it on. You won't see it here. You won't see an indicator, but you get notice on the chart that something's coming up, and you get indication when you should take the trade. That's the TV trades thing. That's the way that's going to work out. I'm also working on this for Trading IQ. All right, Trading IQ is going to get a different version, something more like this with an actual oscillator that you'll see. Because Trading IQ is where you learn how to trade. TV trades is where you just get the indication to trade and you trade. It's concrete, solid. Just you see the indication to trade and you take the trade. You don't hesitate. You just take it. You accept the risk on every trade. Trading IQ is where you learn how to trade. So you'll be able to see it come together, and you'll understand when the trade is coming up. Understand what makes the indication happen. Like when you get oversold right here, you know the very next bar that turns up is going to pull it out of the oversold if it turns up on the next bar. Okay, so you can be ready ahead of time because we're using range bars. And this is all stuff that will be coming to you guys in Trading IQ, mytradingiq.com, and in targetviewtrades.com. Okay, both platforms will have something like this. I've been working really hard on this, and I want to have it in both of them so that I can use it regularly in my daily trading in front of you guys. If I did it with only one of them, I could only use it with one of them in front of whatever audience that was. I try to have it there for me to use all the time because it's that good. All right. So on the NQ, we are moving up right here, and we want to pull back down and test the ribbon. Right? We had a purple arrow here that you could take in a no trade zone with the with the Rust. I'm not sorry, the ES, with the ES. Well, any of them you could take that purple out in no trade zone. I was just trying to take that NQ trade, and there it is. Okay, I just put the NQ and put the NQ on. My stop is at +1 tick. My stop is at +1 point. I got 1 point on that. I wish I would have got a lot more, but I got 1 point. All right, it's 12:41, so I have 19 minutes left. 19 minutes. We did get the green arrow over here. Now this didn't turn out to be. It actually wasn't even a valid trade. It pulled back too deep. I thought it was going to be a green arrow as it pulled out of the oversolds here, but it pulled back too deep, and I didn't even notice that. I was also looking at this here. This is going to give us another one right here. Another opportunity right there. What the heck, man? It messed up my work. It didn't fill it. All right, so over here on the YM, this last green arrow did not put in a higher swing, so we're not going to be looking for another trade in that direction right now. The Russell needs to pull back and hit the ribbon. It didn't give us a green arrow or a blue arrow, so we just can take any pullback over there. Back over here on the NQ, it looks like we might have another opportunity here coming up. Now, this is not using TIQ. This would not be an opportunity because the black line got into the red. You don't want to take that trade. Okay, you want to wait.
Yes.
Turn around and give us another chance. The ES, yes, is coming down and hitting the ribbon right here. That is giving us potential. Right now, it's a ribbon trade because it has to come out of the oversold, right? If it doesn't hit the black line in the ribbon, then it's definitely going to be a trade. 2025 up to 22.25. Okay, 2025 up to 22.25, like that. If it pulls back and hits the black line in the ribbon, then it has to come out of the oversold. But it looks like it's just going to push up. And going back to reading the DOM this morning, the high of the day is right here, and the number that it's searching for is right there, right up above the high of the day, right there. Going back to reading the DOM from this morning. All right, so I'm going to bump my stop to break even, and that's a great target number right there. That would be, how many ticks would that be? I think 9 ticks right there. 9 ticks is probably going to take me out of break even right here, and that's okay. It's okay that it took me out of break even. It's still going to make it up there to 55.25. All right, I'll highlight that for you. And while I'm highlighting that, let me explain why you have a blue and purple arrow right there. Okay. Blue and purple arrows satisfy the same thing. The only thing that makes it blue, in addition to the purple, is that you came out of the oversold. So you just went right up to that number there. I knew it was going up there. That was part of reading the DOM today. 55.20. It hasn't actually made it to 55.25 yet, but it's going to. But that was part of reading the DOM today, right? So the thing that made it a blue arrow is that it came out of the oversold. If it did not come out of the oversold, like this one back here, you just have the purple arrow, right? The purple arrow meets all the blue requirements except the oversold, but it has the additional requirement of the outer band being the right color. Okay, so the difference between the two, well, there's going to be more momentum in a purple arrow than there will be in a blue arrow. And there's usually going to be more room to run in a blue arrow than there is in a purple arrow, though it's really close usually. But when I say room to run, I mean when it goes all the way down into the oversold and pops out, you anticipate it's going to go from all the way in the oversold to all the way in the overbought. Okay, and that's the way that it works. I don't see any questions coming in here, guys. So we'll just keep trading. We're over here right now on the NQ hitting the ribbon. We've hit the black line now, so it's got to come out of the overbought to be a trade. Now it's gone right through it all, and it's not going to be a trade. I don't think it's gone too far. Yeah, it's gone too far. It's not a trade. You see how the black line right there just got into the green? That disqualifies the short trade. Okay. This right here, on the ES is a valid long trade, and that one should get up to the that same number. What was it? 20, 25 even, 25 even. That green arrow right there should get up to 25 even. We didn't have a lot of momentum off this last one. Right, it kind of lost a little bit of momentum, but the pullback wasn't deep, and this pullback was less than the last pullback, so it's still got some momentum going upward right here. It's getting a little choppy, but it should make it up there. We should get up there. I'll bring it over and show it to you. Here it is. Okay, here it is, and this is the number we're going for right there. We need 4 ticks in profit to bump the stop. We need to go up 1 more tick to bump that stop. There it is. Stop and break even. Now we should hit it on this one. It should go all the way up to here. Actually, it should go right up to there. I don't have my little note things that pop up on it, but if I did, let me know when it gets up there. Now it's having a little trouble and getting sucked back into the ribbon here. And it's going to take me out of break even again. See, on each one of those trades, I had 4 ticks in profit. There was enough available right there for me to get the gold for the day. In the meantime, the Russell's doing basically the same thing as the ES, which is kind of unusual because Russell's usually its own thing. Now this did not put in a higher swing, so we can't take any more trades. We're going right into a no trade zone. Russell went into a no trade zone, and it looks like it came out, but I'm not sure we're painting properly on my bar. Yeah, it did. It came out. All right, so we
Russell was up over 2% today.
Was it really?
Yep.
Good. Good. So the stuff that I was talking about yesterday, the bigger picture stuff that I was talking about yesterday, the head and shoulder pattern, the inverted head and shoulder pattern that I was talking about yesterday, that's coming into play right here, guys. It's developing and coming into play. Right, this area right here that I said yesterday, we're almost there now. And the head and shoulder pattern that I was talking about yesterday when I said it should get up into this area, it's just spread out a little bit, right? So this is a shoulder, this is a head, that gap is our neckline, right? So it's gonna get up here, probably consolidate a little bit right here, fill that gap and consolidate a little bit. And, you know, I know the major companies that made this all happen, you know, they're not going to stay down forever. And it's just a buying opportunity for everybody there. So what I think we'll see happen is we'll see this rise up here probably by the end of next week. And I said this yesterday. I think I said this yesterday. You know, down here when it starts to move up, you get up above the BBC, is trying to get to the zone above. I said that this morning. It's trying to get to the zone above. The call options from down here for the middle of next week, I'm pretty sure I said that yesterday. They should be worth something by Wednesday next week, if they don't inspire by just a thought. Okay. The head and shoulder pattern. This is the head, inverted head and shoulder pattern. This is the head, this is the shoulder. It's building the other shoulder over here. Just my thought. The NQ right now needs a down close. Needs a down close, and there it is. And I'm short the NQ. It does not look good. It's not looking good at all, but we'll see where it goes. Gave me a green arrow now. We need to hit the break even button when we get 8 ticks in profit on the NQ. And we almost had it right there. See how thin the NQ is trading? That's why I stopped trading it today. There we go. Stop to break even. Now hopefully we get the full 30 on it. And I'll get rid of that one so I don't get messed up. And that got rid of my actual target too. So just take a little profit and be done. I keep forgetting when I cancel one end of that bracket, it cancels the other end. So it took a little profit. Now, because we took that and it did not put in a lower swing, I cannot take this purple arrow right here, right? Because we took that and it did not put in a lower swing. There's no trade in the purple arrow. Right. More stuff, more questions, anything like that? Anybody? Anybody? I want to see the pullback up here and test the ribbon. Okay, 568. That down close right there on the YM. I'm going short, and I just did. All right, I'm short the YM right there. Now this is off the ribbon right here. This is a ribbon trade. It didn't give us any arrow because it didn't come out of the overbought. But when it comes out of the overbought right now, it should give us an arrow. Hopefully it's not going to stop us out before it does. And it should give us an arrow, and it should make it all the way back down here to 538. All right, so that'd be a really nice trade if it doesn't stop us out first. And it's going to stop us out first. All right, well, it happens. Over here on the ES, now we'll pull back up and testing the ribbon here. We are also in the overbought, so I'd be looking for a down close on this. It's got a high here of 19, so I'll be selling 17 on that right now. Just like this. Okay. And we need the down close, and that should trigger us in. The down close should happen right here at 17.25, and it should trigger us in here somewhere around 17. 81 takes forever like that, because that means I'm going to get a lot of slippage. Ooh, it didn't fill me. Okay. Well, we got the down close, so I can try to get a better fill then. And it's still giving me slippage. Anyway, my stop should be at 10 ticks, not at 8 ticks. That's what my stop set for the 4 tick range. There we go. Stop's going to break even now. Now my target is still in place. Should be because I didn't cancel the original order. We should get all the way down here to 1375. This number right there. See it in the DOM? Those of you guys that were in there this morning, you see it in the DOM, right? Everything that I said this morning is happening again and again. Now there are other numbers happening down here, so I'm going to keep pushing down. There's 8. There's other numbers down here, so I'm going to keep pushing down. There's 10 and 12, and 12 is what we ended up with. Okay, so that was straight out of the lesson plan this morning. Again, reading the DOM, reading what is in front of you. Okay, great trade. I'll watch the NQ for another trade over here. There's the green arrow on the NQ. Now, the last green arrow was in this direction, so we didn't need to put an overswing. So this is a valid green arrow here. Now this green arrow has already gone 8 ticks into profit from the proper entry point. It's already gone 8 ticks into profit, so it's too late to get into it now if you didn't get into it. Right over here on the YM, you see this green arrow did not put in an overswing, so you can't trade in that direction now. The ES did, so if we got another trade opportunity here on the ES, we could take it. And it looks like we're going to get a black arrow coming up right here. On a down close, it'd be a black arrow. That was 1650 down to 1450 is what that black arrow would be right now. Right now that number's changed. I think that'd be 1675. Now it may not be a black arrow. Okay, it may hit the ribbon, be 1725 down to 1525, and it may be a blue, green, purple. It won't be green. It could be a blue and purple arrow right now. Right, the outer band's still the right color, so it could be a blue and a purple arrow right here. The Russell actually hit the black line on the pullback, so it needs a down close that pulls it out of the overbought. That's what the Russell needs. All right, this blue purple arrow that I just was mentioning over here that we could get on this, we just got over here on the NQ, but the outer bands are completely flat on the NQ, so you don't want that. We did end up with a blue arrow there on the ES. All right, so here's the blue arrow on the ES. It's not really giving us anything on the downside. And the pullback side is all the way up here, 1725. Okay, so now we got something on the downside right there. So after 4 ticks in profit, the stop goes to break even. There it is. I actually hit +1, and I like it a little further down here on the downside. Right there. And I think I'm going to get +1 on this. I did get +1 on that. Okay. We're getting a lot of trades off in this session. This is kind of like the morning, except I'm doing the NQ right now too a little bit. You see how thin the NQ is trading? See the total numbers down here? In the 20s and teens. It makes me not want to trade it at all. It means you're going to get a ton of slippage. Even with one contract. All right. All right.
When I cover the news today, after you're done, people will understand why the NQ is trading so thin.
Good stuff. You want to wait and listen to that, everybody. All right. So we have about 5 minutes left. Reminded everyone there is a partners meeting tonight, 8 p.m. All right. If you are a partner, want to be in it. Or if you're not a partner, if you're on the trial and you want to be in it, you need to become a partner before that time tonight. And you should have an email from yesterday, and there'll be another one out today telling you how to become a partner to get into that. All right. We have outer bands are spread out right here. We're not in the oversold here, so we're not going to have any kind of an arrow because we're not coming out of the oversold right there. We did pop out of the oversold here. And here. Now we're going to have something on the NQ. Let's get ready for it on the NQ. There it is. And that is a blue and purple arrow. And here it is. And my stop's going to go to break even after 8 ticks. There's 8 ticks. Stop's at break even. Get rid of the original stop. Getting rid of the original stop just took my target off the trade. So I don't have a 30-tick target on here anymore. So it should get up above the prior swing high. Right there. It is right now. So I'm going to lock in whatever that is. 4.16 ticks right there. And that was a nice NQ trade. Pretty easy to do. See, take, all that stuff. All right, on the YM, right now on the YM, we're at the BBC, and we've gone through the BBC itself. We haven't hit the black line yet, so that's a valid trade whether you come out of the oversold or not. All right, it's a blue arrow, valid trade. There it is. This is probably gonna be our last trade of this session. So our stop is 10 ticks away, and this is what's printing right here for a target. So far, that's only 9 ticks above. Hopefully we'll get something else that prints better once it starts moving up. See what I was saying this morning, when price starts to move up, always be looking for the next level up. Okay, you gotta trail your stop after, according to the plan, you gotta trail your stop. But once you've got your stop trailed, always be looking for the next level up, the next target. Right? See, that one's becoming better right now. And on the downside, it might stop us out, but it should really push up from right here. We pulled back deep enough right now that we're equal to the prior swing low right here. It should push up off of this and get up to the prior swing high, which is actually all the way up here at 599. Looks like it's going to stop here. Hasn't yet, but it looks like it's gonna. It did. There it was. All right, that will stop me out. If I'm going to get stopped out, I want it to be on the YM or the Russell because it's only $50 contract. Stopping out on those. It's not that bad. Stopping out on the S where it's under $25 a contract. That stings a little bit more. Anyway, it is time, guys. I have to take my son to the doctor. So If you have not signed up for the free trial and you want to, go here to mytradingiq.com, mytradingiq.com. Click on the purple button right here. When you click on that purple button, you will be sent to this registration page. All right. All that we ask for here is first name, last name, email, phone number, 5 multiple choice questions, and then if you have an NinjaTrader, give us a machine ID. If you have TradingView, give us your login ID. If you have both, give us both, and we'll enable the indicators on both of them for you. Okay. That is all that you need to do. All that you need to do to get the free trial. All right. That is it, guys. With that, I'll wrap it up and pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. It looks like you are.
Yes, sir. Recap of the morning session.
This morning it took us 4 minutes and 1 trade to get to $1,900.
Great job.
Thank you very much.
Okay, for those of you that may have wandered in late, as happens from time to time, here's where we stand on the week with Logic 247. Over the last, and good luck at the doctor today. We'll be praying for you. We're in week 312. Over those 312 weeks, we've issued over 17,200 individual handcrafted alerts. What we've averaged on a weekly basis is 20% or less being stopped out based on market structure and the very simple process we teach all of our passport holders in their one-on-one mentoring sessions. This week, since the market opened Sunday night at 6 p.m. Eastern, we've issued a total of 88 alerts. 11 haven't triggered. We're still waiting on 18. So that's 59 actionable alerts, of which 8 or 14% would have been stopped out. Again, based on market structure and that simple process that we teach all passport holders in their one-on-one mentoring sessions. Now, with the logic alerts, they can come out anytime around the clock, 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. So their day session is our night session and vice versa. Each logic alert has an entry price, an initial target designed to help you get your goal for the day, and then additional targets, and then a final trade to target. The purpose of these logic alerts is not just so you can trade them, and get profitable. The true purpose of the logic alerts is to teach you how to read a chart. Now, you might think, I know how to read a chart. Okay, well, we have a rather unique way of reading the chart, which you will be taught should you choose to become a passport holder. You will learn how to pick that entry price, that initial target, the additional targets, and the final trade to target. Okay? Once you've mastered trading with the logic alerts and learning how to read the chart so that everything in a logic alert makes perfect sense to you, then you'll start part 2 of learning how to trade. First, you got to learn how to read, because until you can read, and I'm not talking about a book, I'm talking about a chart. When you started school, you had to learn how to read the English language if you were born in America. Before you could read, before the teacher could, teach you other subjects, you have to be able to read the textbook. I mean, it's just elementary, right? Unintended, I guess. But in the financial markets, you're not reading words, sentences, and paragraphs. You're reading price action, how price flows, where to expect resistance, and support. Every chart tells a story. And you need to get to the point where you can look at a chart of any market in any time frame and know with a great degree of certainty what the next high probability move is. Now, as I said, with the logic alerts, we've averaged on a weekly basis 20% or less being stopped out. This week, on Thursday, we're sitting at 14%. So you're never going to get to the point where you never get stopped out. And the sooner you get that out of your head, the better chance that you actually could become a consistently profitable trader. Getting stopped out is as much a part of trading as breathing is a part of life. Now, as you learn to read the chart, the way we read the chart, via the Logic 247 alerts, then you're ready to take a swing at the CTAs, concierge trade alerts. Unlike the logic alerts, which have an entry price and initial targets and additional targets and a final trade to target, this is a very different format. Also, the CTAs don't come out around the clock like the logic alerts. The CTAs are posted as a static report shortly after the Globex Open each evening. Last night, I notified everyone via the discussion group that the alerts would come late, the CTAs, because I had to drive all the way across the valley. Now, I want you to think, you guys have probably heard of Phoenix, Arizona. It's, I think, the 5th largest city in America. There's no Apple store in the city of Phoenix. Not one. We had to drive all the way to Chandler. And things got real ugly once we got there, but I won't go into that part. So, needless to say, with rush hour, gridlock traffic, etc., blah, blah, blah. The market opened at 6. I wasn't able to get the report out last night until 7 p.m. Eastern, which is only 1 hour after the market opened, so not a big deal. Now, when the report is published, the first thing you do is go to the 30-minute chart of whatever markets you actually trade. And on that 30-minute chart, you want to make a note of where price is at the time the report comes out. Then you want to draw a line in the sand at the long target and a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, remember with the logic alerts, you had the entry price, the initial target, multiple targets. This is where you find out what you've learned, if you've learned it, or if you need to go back and try it again. Because now you're looking left to spot all that information yourself that I provided for you in the logic alerts. And you're learning how price truly behaves at a weekly trading zone. This is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. If price gets above the 30-minute BBC, it's trying to get to the weekly zone above. And if price gets below the 30-minute BBC, it's trying to get to the zone below. Now, BBC, that's the green line you see on my charts. You can apply it to any time frame, tick chart, range chart. Works the same. If price gets above the green line on whatever time frame you're looking at, then you should anticipate higher prices. When price gets below the green line, then you should anticipate lower prices. That's really simple, right? Now, the tough part is resisting the urge to complicate things. As long as you know which way the wind is blowing and why, it's pretty simple to reach your goal for the day. So, just let me reiterate before we go to the charts and the news. Every one of our members and trial members had every one of these targets last night at 7 p.m. Eastern, 1 hour after the markets opened. Now, I'm going to go through these news articles pretty quick. Meta Platforms is set to be hit in a few weeks with its first EU, European Union, antitrust fine for tying classified advertisements service marketplace with its Facebook social network. People with direct knowledge of the matter said. The move by the European Commission will come more than a year and a half after it accused the U.S. tech giant of giving its classified ad service, Facebook Marketplace, an unfair advantage by bundling the two services together. The EU competition watchdog also said Meta abused its dominance by unilaterally imposing unfair trading conditions on competing online classified ad services that advertise on Facebook or Instagram. Now, how hard is this going to hit Mark's pocketbook? $13.4 billion, or 10% of Meta's 2023 global revenue. So, while it stings in the grand scheme of things, it's not much. But it might encourage them to behave going forward. You know, there was once a monopoly called Ma Bell, which was actually AT&T. They broke it up into the Baby Bells. A lot of you may not be old enough to even remember this. And then after the Baby Bells, this crazy little company called MCI came along. And the business of long distance was forever changed. When I was a kid growing up, if you wanted, there was an article from a podcast that I was going to share it to today, but I forgot to do it. It was a magazine ad that was promoting. This is still when Ma Bell had the monopoly. They had a special for just $10 a minute. You could call someone in a foreign country. Now, let me add that that's $10 in $1960, which would probably be a little over $100 a minute. Did I say hour? I said minute. Can you imagine paying $100 a minute to talk to somebody? Because the generation now, their phone, they can just, call anywhere in the U.S. for free. And if they have an app like WhatsApp or Telegram, they can call internationally, absolutely free. The world has changed, okay? Now, does Meta have a monopoly in this case? Well, the EU thinks so, to the tune of $13.4 billion. I'm sure they'll appeal it. They've got the money to. Google parent Alphabet kicked off big tech's earnings season Tuesday, giving Wall Street its first look at digital ad and cloud spending in the quarter. The company reported better than expected earnings and revenue on the strength of search ads and continued cloud growth, but fell short on YouTube ad sales. You want to watch a YouTube video and that annoying little thing, you got to wait 5 seconds before you can click skip ad. Yeah. On the other hand, Ford stock is cratering today after the automaker missed on second quarter profit yesterday and did not lift its full year profit guidance like its big three rival GM did. For the quarter, Ford reported revenue of $47.8 billion versus $43.3 billion. That was the Bloomberg's consensus estimate, a result that's 2.9% higher than a year ago. Ford posted adjusted earnings per share of 47 cents versus the expected 67 cents on adjusted EBITDA of $2.8 billion versus $3.7 billion expected, missing both estimates. And as I speak, Ford is down almost 17% on the session. Amazon. Inside Amazon's chip lab in Austin, Texas, half a dozen engineers on a Friday afternoon put a closely guarded new server design through its paces. The server was packed with Amazon's artificial intelligence chips that compete with those from market leader NVIDIA. Amazon executive Rami Sino said on Friday during a visit to the lab, Amazon is developing its own processors to limit its reliance on costly NVIDIA chips, the so-called NVIDIA tax, that power some of the artificial intelligence cloud business at its Amazon Web Services, which is where Amazon makes most of its money. You think it's those little trucks that show up at your house 5 times a day dropping off packages? That's nothing compared to what they make in the cloud. Through its homegrown chips, Amazon wants to help customers compute complex calculations and process enormous amounts of data more cheaply. Its rivals, Microsoft and Alphabet, are doing the same. While the company's AI chip efforts are nascent, Amazon's workhorse chip, Graviton, that performs non-AI computing, has been under development for nearly a decade and is on its 4th generation. The AI chips, Trainium and Inferentia, are newer designs. So the offering of up to 40 to 50% in some cases of improved price and performance should make it half as expensive as running that same model with NVIDIA. During its recent Prime Day, Amazon deployed 250,000 Graviton chips and 80,000 of its custom AI chips to handle the surge in activity across its platforms. The shopping event generated a record $14.2 billion in sales. Wow. According to Bloomberg, Wall Street traders are betting the Federal Reserve will be able to engineer a soft landing, spurring a rally in riskier corners of the market, with stocks rebounding after a sell-off that jolted markets around the globe. Economically sensitive shares such as financial and industrial companies led gains today. Smaller firms extended this month's surge to almost 10%, largely outpacing the group of tech megacaps. You heard me mention this morning that the Russell, which is 2,000 small cap companies, our man in the street referred to it as, was up 2% on the day. The S&P 500 marched from one record to the next in the first half of the year. Some investors grew concerned that only a handful of members outside of technology giants were even participating in the rally. Corners of the market outside of big tech are now barreling higher as investors grow more confident the Fed is taming inflation without breaking the economy and will soon be able to cut interest rates. Now, from another perspective, Reuters, investors are ditching some of this year's favorite trades as a retreat in the glitzy mega-cap risks snowballing into a multi-pronged sell-off that has hit everything from cryptocurrency to gold and made calling the market's next move ever more complex. Shares on Wall Street yesterday suffered their worst daily sell-off since late 2022, with the tech-heavy NASDAQ composite dropping 3.6% and the S&P 500 down 2.3%. Both gauges paired some of those losses as they rebounded today. And if you know who Sabine-Stillwater is, you might want to revisit your position there. And one last piece of news, if you buy into these type of things. The U.S. economy grew at a faster than expected pace in the second quarter. The Bureau of Economic Analysis advanced estimate of second quarter U.S. gross domestic product, known as GDP, showed the economy grew at an annualized pace of 2.8% during the period, well above the 2% growth expected by economists surveyed by Bloomberg. Reading came in higher than first quarter GDP, which was revised down to 1.4%. So it's only a matter of time till the numbers I just gave you are also revised down. And that is my opinion. All right. S&P daily chart. Green line, BBC. Bearish below it, bullish above it. The pullback to the BBC holds more often than it doesn't, but we know eventually price will trade through the BBC, as it did here, and we hit on the 19th the 24% fib retracement. See it? Now, when you hit a fib retracement on a daily chart, you expect a bounce, which we got back to the BBC and the step line. While we expect the bounce, we also expect this to be resistance. If you've been tuning in every day, then you already know this. If you're tuning in for the first time, and remember, we archive all broadcasts on our YouTube channel, youtube.com/CFRN. So you can go back and listen and see if I'm pulling your leg or not. Today, or yesterday, this was the big sell-off we were just talking about, okay? And we hit the lowest fib extension. You see, from this low to this high to this low allowed us to project these fib extensions. Fib extensions and fib retracements use the same 14th century math, but it's applied in a different way. Now, we're we're on the verge of having something we haven't had since, back in April maybe. A bearish cross on the daily. That's when the red line gets below the green line. So yesterday we slammed down, hit that 38% fib retracement. Almost. Bounced. We hit it today. And then we got a very healthy bounce. Now, look where we are. Now, when we hit a 38, just like when we hit a 24, we expect a bounce. Now this 24 bounce was here. This 38 bounce, okay, we spiked through it this morning. Then buyers came in and pushed us back up almost to the step line. Now we're well off the high of the day, and we're certainly well off the low of the day. Could we see some sideways consolidation here at the 38% fib retracement? Yes. And if that's what happens, red and falling is going to get below the daily BBC. And then the number I've been looking for, 5370/71, that could come into play. Now, we've got some obstacles like the low of June 11th that we need to overcome. Got like a triple bottom right there. That's at 53.96. Okay. Then the 50% fib retracement, and then the 62. If price should continue dropping and take out the 62, I will remove these fibs and I will draw reverse fibs. What are reverse fibs? In an uptrend, you draw your fibs from the low to the high. In a downtrend, a confirmed downtrend, which means we actually want to see price come back up and tap the BBC or get real close and fail and give us another big red candle. Then we're in a confirmed downtrend. So we'll then draw our fibs from the high to the low versus drawing from the low to the high. But don't worry your pretty little head over that, because I'll keep you posted on a daily basis what the big picture looks like. Now, you may not trade the S&P, you may not trade futures, you may trade stocks or crypto or Forex or ETFs. I'll let you in on a little secret. The institutional traders who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So, while you're not going to trade a daily chart, I want you to learn to go to the daily chart for very important information, especially before you begin your trading session each day. Spend 2 minutes with whatever market you trade. Look over the shoulder of the deep pockets that move price. See what they're doing. Because you only have to do what they're doing long enough to get your goal for the day, and then have the discipline to put the mouse away. Would it surprise me to end up with a doji right at this low that was put in, centered on this low that was put in July 2nd? No, in fact, I think I wrote about that in the discussion group last night or sometime yesterday. Could have been this morning. Now remember, our next major resistance at a triple bottom right here. The low of this candle is, I can get a read on it. Come on, work with me. June 11th, the low was, boy, Boy, I had it there for a minute. 53.9875. Now, a triple bottom at that price makes that an important price, important area. So it may look like price is, speeding bullet headed to the 50% retracement. Don't let this catch you off guard. Okay? All right. Let's get going. All alerts, logic, and concierge are created on the 30-minute chart. The vertical line separates today, Thursday, from Wednesday, from Tuesday. These are the zones that were created or published Monday morning at 6:15 a.m. Eastern. Once the zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. December 9th of this year will mark 15 years since we started publishing the weekly trading zones for our members every Monday. This is the lowest weekly zone this week for the ES. The market opened here last night below the BBC, so we got to be thinking lower prices. But at the open, red and falling was directly below price. And when red and falling gets directly below price, that's potential support, because it's usually on its way to becoming blue and climbing, which is support. However, look what happened. Blue and climbing crossed that step line and rolled over and became red and falling. Okay? Taking us down to our target and beyond. And this low here, if you look left on your own charts, I'm not going to do it for you. I want you to do it for yourself. It's part of you learning how to read so that you can then learn how to trade. Okay? Support will always send the market looking for resistance. Now, in this case, as you can see, the pullback holds more often than it doesn't. I can show you many, many examples going back forever. But eventually price is going to trade through. Pretty much as we saw on the daily chart. Okay, pullback held and the pullback held, and then price traded through. Pulled back, the pullback held, lower prices. Markets are fractal in nature. I won't go into that whole explanation right now, but if you become a member, I'll make sure you understand it because it's very important. All right, so as we traded through the BBC, we ran up to the zone that was published Monday morning. We made it up to 55.04 half, so we missed the zone by 1.5 points on the first attempt. But when the market finds resistance, it's going to go look for support. Price always reverts to the mean. In our case, the mean is green, and as I explained, we call it the BBC. Stands for bull, bear, cross. If price is below the green line, we're bearish. Once price gets above the green line, we're bullish. So we run up to resistance, pull back to support, and then, like a rocket ship, we go right up to the zone, 55.33/34 from Monday morning. Resistance will always send the market looking for support. So we've now dropped back to the zone, as we did on the previous candle, and found support at 55.06/07. Now price wants to dip below it, but it's got to deal with blue and climbing. Okay, that's very bullish. If the step line manages to cross to the right side of blue and climbing, then we're going to most likely see a retracement back to the BBC. If buyers are serious, they'll get us above the step line, and we'll go back to the long target and the resistance at this zone. Okay, the next zone above that is at 69/70. If in fact price comes back to the BVC and the pullback doesn't hold, remember, it holds more often than not, okay? Like this pullback held, right? Pullback holds more often than not, like this one did. But if price trades through, be aware of this bullish cross, because that's potential support. Price could spike below and find support right here. However, if it gets down to 54.76, then you've got a beautiful 3-point trade opportunity from 76 to 73. And if there's momentum in that move, then your next support is at 54.59, and then 54.33. So no matter what price does, if it moves higher, we know where we want to trade. And possibly all the way back up. If we fail to hold the pullback, we also know where we want to trade. And if we trade through that target, which is completely possible, then we would enjoy trading this. And if we trade through that window of opportunity, who wouldn't love a piece of that? Okay? So, if you've ever been in the military, you're familiar with a term called plan of the day. There's your plan of the day. Doesn't matter what the market does. It doesn't matter which way price goes. You know what you're going to do and when you're going to do it. When price reaches here, or here, or here, or here. And you may have two-sided action. Price could run up through this window, fail to put in a higher high, drop like a rock, and hand you all three of these trades. You got to embrace all possibilities, but don't get greedy. I show you this big picture stuff because I think it helps you as you focus in on your smaller time frames where you're able to limit your risk. As a new trader, you probably don't have a fat account. And if you are a new trader with a fat account, keep it fat, okay? Learn how to trade before you start swinging a lot of contracts. Now again, we're finding support. Found resistance from the zone published Monday, and we're finding support at the zone published Monday. Now, only three things happen at a weekly zone. 70% of the time will be consolidation, 20% of the time rejection. There's rejection. 10% of the time the slice. Okay, when you have a slice, that's where the 30-minute candle slices through the zone like it's not even there. Once it runs out of steam, it will typically retrace back to the zone it sliced through, and in most cases, continue in the direction of the slice. But because the step line has gotten directly above price, it's got to overcome that resistance before this becomes a valid window of opportunity. Okay? All right. On the Dow, here's where we opened. We consolidated for hours at the zone. We pulled up to the BVC. The pullback held. Now, if you're new, you might look at that and go, wait a minute, it didn't actually hold. Yeah, it held. because both of these candles are still touching the green line. Now, were there opportunities here and here and here to get your goal for the day? Yeah. And then here we finally hit the target to the tick. Support sends us to resistance, which sends us back to support, which sends us looking for resistance, which we eventually found at a weekly trading zone, which just so happens to line up with yesterday's bearish cross. See how we spiked the zone? We hit 85. This bearish crossover here. It's roughly 85. A bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Just like this bullish cross, which has led to an extended move. Should price start to drop, this bullish cross right here at 40, we'll call it 42.15 or 42.10, that should be good support. The first time down. The second time down, it may trade through it and find support at the zone or at the low of the day. The Russell. Here's where the market opened last night. Price is trapped between resistance overhead and support below. Sellers won this one. I don't like that term win. It's like you're at the county fair trying to get your sweetheart a stuffed animal. It's ridiculous. But looking left, you'll find out why the market stopped falling there. Support sends us to resistance, which sends us to support ultimately at the zone. The zone sends us back to resistance at the BBC, sends us back to support at the target, back to the zone, back to the zone, 2204/2205. Yeah, we missed it by less than a point. Then the buying came in, punched through. Now, this candle sliced through the zone, right? When it ran out of steam, what did it do? It retraced back to the zone it sliced through. And in one 30-minute candle, it went from zone to zone, where it found what? Resistance. Then, when this candle closed and this candle opened, we had a huge red candle all the way back down to the zone support. Then buyers came in and pushed it back up and closed it above the zone. Here you had a red candle all the way down to blue and climbing support. And look where the 30-minute candle ended. Way up here. Okay. This leg made it all the way up to the target. Now, these targets, again, were published at 7 p.m. Eastern last night. I normally try to get them out by at least 6:30. Some nights I get them out right at the open at 6 p.m. Eastern. Last night was not one of those nights. Notice the step line is crossing blue and climbing. See, on the way up, you had the perfect stack. Price, step line, blue and climbing, BBC. But the step line is attempting to cross to the right side, has crossed to the right side of blue and climbing. What does that indicate? The highest probability move from here is a retracement back to the BBC, which just so happens to be at the zone below. Is there a guarantee that's what will happen? No, In fact, if price punched through blue and climbing, which is directly above price, you could trade 72 to 74, get your goal for the day, possibly take out the high of the day and trade to the next zone overhead. This is what I mean about every chart tells a story, and you've got to learn to read what's happening. Not just after the fact. Anybody can look like a genius with a historic chart. Don't let people and their historic charts cheat you out of your money, okay? You've got to learn to read this in real time, as I'm doing right now, as I'm telling you, based upon the way the structure of the market is. The highest probability move, see a little red there, is a retracement to here. Now, if price were to just drop like a rock, this would be support times 2. Pull back to the BBC holds more often than not. And when price drops to a weekly trading zone, it's support more often than not. On the NQ, here's where we open. It's like the other markets. Price was trapped, resistance overhead, support below. Then blue and climbing turned to red and falling, and that changes everything. And down we go to the target. Support bounces up to resistance, sends us down to support. Back to resistance, back to support, back to resistance, back to support. Resistance, support. That right there is the lowest weekly trading zone this week for the NQ. Even though we've spiked below it, based on almost 15 years of history, the highest probability is that price will close the week at or above the lowest weekly trading zone. Crude oil. If I'm not mistaken, I drew in this window of opportunity on yesterday's broadcast. And we opened last night below the BBC, along with red and falling. We fill that window. We hit the short target. We continued lower. You can see that this initial low came from 2 days ago. Thursday, Wednesday, Tuesday. See? And then again, and then again. Resistance at the zone. Now you'll have to go look left on your own. Find out why this was support. From support to resistance, back to support, back to resistance. At the long target, which sent us back down to the BBC support, which sent us up through this zone to the target. Now, 2 days ago, we had a bearish cross. Look at the horizontal line on my cursor. You see it? Now, price poked through it. Take a look at the step line. It's starting to angle to the right. It hasn't crossed blue and climbing yet. But I would say that there is potential for price to retrace to the BBC. What do you do right now? Nothing. Okay. Well, if it's overcome the bearish cross, why don't I just buy? Well, because you got potential resistance here and here. And if I went further left, there may be other layers of resistance. Gold. Here's where we opened and dropped to the target. Zone, we consolidated. Continue dropping to the next zone. Support. Support sends us to resistance, sends us to support, back to resistance, back to support. Now we've traded below that zone. We got one more zone below. 2304/05. And if I'm not mistaken, there is a current Logic 247 alert, which will enable you to take advantage of this move if price continues to fall. See here, price attempted to cross red and fall, or the step line attempted to cross red and falling, but it wasn't able to do it. Not yet. Okay. If we stagnate and go sideways, consolidate, then that black step line will cross red and falling. At that point, you should then expect a retracement up to the BVC. Right now, that would be resistance times 2. Silver. Here's where we opened last night. We hit the target and bounced, traded through the target. We went through the zone, we sliced it, and then it ran out of steam. So we retraced to the zone we sliced through, and then we continued down to the lowest weekly trading zone for silver. The pull up to the BVC held, pulls more often than not, but we traded down through blue and climbing, which means blue and climbing may be about to roll over like it did here and become red and falling, and if so, we'll revisit this zone. And even if we should trade below this zone, by close of business tomorrow, we expect to be at the zone or above. Now, in 15 years, has there ever been weeks where we closed above the highest zone in any of the markets or below the lowest zone in any of the markets? Yes, of course. A handful, 2 handfuls. I guess it depends on the size of your hands. But more often than not, the week will close out inside of the zones that were issued Monday morning at 6:15 a.m. Eastern. Last, we have the euro. Here's where we open. We pulled up to the BVC, the pullback held, and we dropped to the tick to the short target. Support sent us looking for resistance. I got kind of a double top there. Okay, just shy of that high from yesterday. And so we come back to the BVC, we spike it. By the way, this is not good trading, and you've got to learn to recognize fertile trading soil from dirt. This is dirt. We did get a bounce up to the zone, and it was, in fact, good resistance. So now the market's looking for support. Will the BVC hold? If not, then we trade short down to this low. If there's momentum to this low, there's momentum to the target, and continued momentum to take it to the zone. On the daily chart, we're still straddling that Fib extension. How we close today will be very important. No matter how we close today. In fact, with a wide-ranging day like today, tomorrow could be a day of quiet consolidation. Plus, it's a Friday, and sometimes Fridays can be quiet. If that happens, then comes Sunday night at the open, that may be when we get our bearish cross. It may take an additional day. Okay? We've had a leg and a retracement, a leg and a retracement. And even if the retracement takes us all the way back to the BBC, that does not negate the fact that we've gone from an uptrend to a downtrend. The question, of course, is where will the bottom of that downtrend be? Here at the 38, the 50, or the 62? Tune in daily and keep you abreast. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send us an email, support@cfrn.net. When you become a member, you're going to have 2 hours of live training every trading day in an interactive environment. The purpose of the live training room is to teach, number one, to teach you how to trade the mechanical strategy. Until you master the mechanical strategy, I won't even attempt to teach you discretionary trading. So show up, do the work, ask lots of questions, because you need to put together 10 consecutive days in a row where you reach your goal in 10 trades or less in your demo account before you even consider going live. In fact, the 24/20 blueprint won't give you the green light to go live until you do that. So you got to ask yourself, all right, am I going to take what these guys have spent, God, almost 20 years putting together? Or am I going to take the parts I like and reinvent the wheel? If that's what you're going to do, just keep your money, all right? If you want to learn our strategy, you want to own our indicators, and you're going to follow the rules, both as they're taught in the live training room and as they're taught in the 24/20 blueprint, we welcome you with open arms. We truly do have a trading family where everyone is treated with dignity and respect. We have very high standards. We accept no less. Along with 2 hours of live training every day, you're going to get one-on-one private mentoring as you need it, when you need it. All you got to do is ask. No extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, just as I showed you, over and over again and again. It's a never-ending cycle. You'll also get the Logic 247 alerts around the clock. You'll get the concierge trade alerts when they're published each evening. You'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members-only workshop every Thursday night, which is tonight. So members, please have your questions ready at 8 p.m. Eastern. And if you've been on the trial, you should have received an email already that explains how you can become a member. You should have got one yesterday, and you might get another one today. In the event you did not get the email, call us. If you don't get a live person, leave a message. Email support@cfrn.net and just say, hey, I want to become a member. We will send you a link. A couple mouse clicks, you'll become a bona fide passport holder, and you will be in the members only workshop tonight. Plus, you'll have the golden key that opens all the private channels in Telegram, which means you can watch years of members only workshops. If you want to, do you need to? Not really. But it's nice to know you've got that resource at your disposal. Everything a trader needs, all under one roof, one low price. With around-the-clock support via Telegram. And by the way, the Telegram discussion groups, that's not something you pay for. That is a value-added service. It is a family-friendly environment. If you get sideways, we'll talk to you about it. And if you can't get it right, you will be banned. Because we promise all of our members family-friendly environment. And you know what? We're really blessed. Because approaching 20 years, we've had very few problems. 99.99.99% of our traders are very happy campers. Why? Because after struggling for years to try and learn how to trade, they're actually learning. They're actually profitable. You don't realize how valuable that is until you lose it. And in 20 years, it's only happened to 2 people. True story. Okay, good word for the day. Last couple days, we talked about theory or truth. Today's part 3. Romans 4:25. He was raised to life to make us right with God. The great Houdini promised he'd come back from the dead and talk to his friends. Some of them actually consulted mediums to see if there was any word from beyond the grave. But there wasn't. Only one man who promised to rise from the dead kept his promise. Jesus. And he did it to make us right with God. Business transactions in Bible days were relatively uncomplicated. Once the seller laid down a price and the buyer picked it up, the deal was done. On Good Friday, Jesus laid down the price. God picked it up on Easter Sunday. And your salvation was paid for. But the greatest proof of the resurrection is found in the transformed lives of people all over the world. The songwriter put it like this: You ask me how I know he lives. He lives within my heart. And sometimes people will ask me, this God you're always talking about, how do you even know he's real? You know what my answer is? I just spoke to him. In one of his final appearances recorded in the book of Revelation, Jesus announced, I am he that lives and was dead, and behold, I am alive forevermore. Whosoever lives and believes in me shall never die. You'll find that in Revelation 1:18 and also in John 11:26. Today, this very moment, if you're not a believer, Christ stands knocking at the door of your heart, saying, If any man hear my voice and open the door, I will come in. Revelation 3:20. Unless you know Christ personally as your Savior, you're without hope in this world and the one to come. The resurrection of Christ is your only hope. Without that, you have nothing to look forward to but a hole in the ground. So today, repent of your sins and place your trust in the one who died and rose again for you. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.